Hi traders, David here from Apexalpha Wave Trader. In this video, I want to teach you how you can find good wave trader setups using about 4 different things that are pertinent to traders, which I believe one of them is support and resistance, the second is candlestick reversal patterns, the third is divergence, the fourth is Elliott waves. Now, if you are familiar with the Apexalpha Wave Trader setup, then you know that we use all these factors when we want to look for trades. But I lean heavily on the Elliott waves, and I believe that you should have a very good idea of it by now. There are videos I've made that you can watch. If you go through the playlist, you'll be able to find them. So I'm going to go into this now. It's going to be a sort of free fall. I will speak freely as I see what I need to see. I just need you to follow along. Now, this is a clean chart. Okay, the only indicator I have here is this one that actually shows where the 21 and 5 EMAs cross. Okay, and yeah, since you are familiar with the wave trader setup, you know that we are looking for golden crosses and death crosses. For instance, this is a golden cross, here is a death cross, and so on and so forth. Now, as we go along, I will be using the indicators once in a while to show you things, but I want you to know how to interpret the chart for yourself using clean charts so that you don't have confusion whenever you are looking for trades. Okay, now before we go on again, let me say this. The Apexalpha Wave Trader system and setup works best in a trending market, especially when you get to levels of reversals, tops, and bottoms. Okay, for instance, this is a top, right? This is a bottom, and the reversals work best at those regions, but it is possible to find them with every, for instance, this is the monthly chart. You can find them on every candle if you know what to look for. Okay, you can even find them in markets that look confusing like this. In other words, a sideways market, and that's what I'm trying to show you guys here. So I'm going to speak freely, and I want you to catch whatever you can catch. Feel free to watch this video over and over until you're able to fully follow along with most of what I'm saying. So I'm looking at the Euro JPY chart now. This is the monthly chart. So this is what you are going to do. Each time you want to find a trade, you come to the monthly chart and you start a top-down analysis. Now, just by eyeballing this, you can tell that we are in a downtrend. Okay, so that one you should know just by looking at the chart. But I want you to see what's going on here. Where the market is currently, you can see that there seems to be a lot of activity in this region to the left and also here. So it stands to reason that this area looks like a very strong area for support. So what you are going to do is eyeball this on the monthly chart, okay, and then go to the weekly. Now, when you come to the weekly chart, this is what you are supposed to do, or this is what I advise you to do. Just mark the most recent levels of support and resistance. The reason why you do that is because you are looking for trades for the day, or at least for that week. So by marking these levels of support and resistance, it gives you a pretty good idea of the range that the market is trading. Okay, so I'm just going to mark here. Okay, and where the market is currently is also a level of it acted as support here, and it seems like it's acting as support here, and most likely might act as resistance here. So now that we've marked it on the weekly chart, go down to the daily chart and have a look, and you see these are the levels I marked, and you can see what's going on here. Now, you see how good support and resistance help you in determining some things. And now that we've seen this, the next thing you are going to have to pay attention to, if I'll just make the chart bigger, is the candlestick patterns. You are familiar with spinning tops, you are familiar with railroad tracks, you are familiar with hammers, and this is also a sort of spinning top as well. Now, the essence of why you should know this from the weekly and daily charts is because whenever you see a reversal candlestick, it usually will give you a wave top situation or a wave bottom situation. And if you still do not know this, I advise you to go through the playlist on the Apexalpha Wave Trader channel on YouTube, and please avail yourself of the free videos and understand this. I'm not going to explain it in depth here. So now we come to this chart and you see that we have a hammer just being resisted off of this level, which is acting as resistance to it now. So that tells you that the market halted here. Now if we go down lower to the 4-hour chart, you will see now that we now have what I call a wave top situation, or what the traders in the trading world call a 1, 2, 3 top. Okay, that's a colloquial name. I call it a wave top because I trade waves. So now you see how easy it was for me to find a trade. So because I now have a 1, 2, 3 top, I now have confidence to go to enter a trade on the short side. And I also have a calculator that tells me how far price is going to go. So this is the calculator. I take it from the number 1 point, bring it to my number 2 point like so, and you can see I have price targets here. Okay, so you can go as low as target 6, and you can see that target 6 is almost on the same level as this area of support that we marked. But what I believe for this particular trade is, when you see a trade like this, be cognizant of the most current levels of support and resistance that are pertinent to you. In our own case, it's this region here. So while it's possible that the market has the power to go down to the sixth target, the first area that you may want to take your profit is in this region. Okay, so that means the number 3 target level is okay. And from where we are currently right now, you can see that from there to here it's about 51 pips. So not bad for a day trade at all. So you can see that even though you use top-down analysis starting from the monthly, you drew your support and resistance lines from the weekly, and then you were paying attention to the daily chart candlestick, you see that it's still possible for you to take intraday trades using this system. So I hope that was instructional for you guys. Now I'm going to quickly go through a couple more charts so that we will see if we can locate other opportunities like that. Okay, I hope that so far you are paying attention. So let's just delete this and let me find another currency pair. Let's see, let me just eyeball this. Let's just choose a pair out of the blue. Let's just choose a pair like New Zealand card. Okay, we hardly ever trade that, so let's look at that. So let's go to the monthly chart now, and then we'll start the process again. So the first thing you do is you eyeball the chart, have an idea of what the chart is telling you, quite okay. But at the same time, look for areas of support and resistance immediately. That's the first thing I want you to do. So now by looking at the monthly chart, I can tell that this region here is acting as good. It's acting as good support right now. Don't worry about some of the other factors here. Sometimes I pay attention to the wicks, okay, but I usually pay attention to the areas where the market seems to respect the most, like where there's more activity. For instance, the price was resisted here, okay, here, and here. So that is why I'm looking at this potential area first. So, but I don't mark it from the monthly because my bias is mostly going to be swing trades and intraday. So I start paying attention to it from the weekly. So when I come to the weekly, you can see right now this is what's going on. And just by looking at the weekly chart, you can see that this area looks like a very strong area of support. Okay, so let's just mark that as such. Okay, and now mark here too. So that means that for the week, these are the areas that I'm paying attention to. And even by eyeballing this, now you see I'm doing this without the indicators. I'm not saying you shouldn't use the EMAs. I'm not saying you shouldn't use MACD. I'm trying to tell you that even without the indicators, you should be able to locate trades. Okay, so now you see that right now where we are, the market is bouncing off of this region. So we go down to the daily chart to see what is going on, and now you see that the market is bouncing off of this region. So obviously we might be headed down, but I'm looking at this and I'm seeing that if I were to draw trend lines from here, you can see that the market seems to be respecting this region also. So the trend lines also act as support or resistance. Okay, but right now this daily candle has punched through this trend line, but it's not established yet. We will know this only by the next day. So remember, we're just trying to find trades here. Okay, so you have to go to the 4-hour or 1-hour chart to determine if it is worthwhile. Now for a chart like this, I would tell you to stay out of this kind of chart because this is just traders fighting each other here. It's messy. Okay, you get into this kind of trade, more likely than not you are going to lose. But it's possible that we've already broken through, because this is a 4-hour chart and we already have a full candle here formed after the effect of the trend line. So this may be that the trend has broken, but we are looking for wave tops and wave bottoms. Okay, so this is not a very good chart for you to want to look for a wave top or a wave bottom situation now. All right, however, it's possible that we could actually get a wave trade here if we were willing to be patient. But let's just assume that you don't want to wait for on this chart, so let's look for another one. So let me take let's take the New Zealand JPY and have a look. So remember, whenever you are doing this, you have to start from the monthly, so you have an idea of what's going on. So we come to the monthly chart and we have a quick look, and you can see that this region here has been very strong in area of support and resistance, and that's where the market seems to be halting now. So go to the weekly and have a look, and on the weekly chart you can see there's a lot of activity going on here. So straight away I want you to consider marking these regions here and here, okay, for now, because these are all weekly candles. Every candle there takes a week to form. So, and the market seems to be perambulating in this region. Now, if I wanted to count waves, I'll tell you that this was the first, second, third, so we are definitely in a fourth wave. Now, if this was a 4-hour chart or a one hour chart, I'll tell you to leave out fourth waves. Don't trade fourth waves as much as possible. But now we are on the weekly chart, so this movement here, we can actually find good trades if we go lower. So let's go to the daily chart, and you can see on the daily chart we are in a sort of range or a channel. And if I were to measure from the top of the channel to the bottom, that's about 270, 271 pips. So don't tell me you can't find trades here. Okay, you can definitely find good trades here. So let's look at this now. This is the daily chart. What do we see? You see here that after the market almost got to this level of support resistance but could not get there, it now formed the spinning top and formed the hammer. So definitely that tells you that the price is going down. Okay, and if it's going down, then most likely it's heading back to where it came from, which is this region here. Okay, so I'm paying attention to where there are a lot of candles here. So I'm going to decide and assume that the market might stop around this region. So from that place to where we are currently is about 58 pips. So if I wanted to find a trade here, I'll be looking for a short trade. So I have to go lower to the 4-hour and 1-hour. And you can see instantly here that we already have a wave top situation that is already in motion. In fact, it's more or less exhausted. Okay, it still has a few pips more to go, most likely to this region here, which is acting as good support. But you can see that most of it is gone. But if you had seen this early, okay, you would have been able to get in probably from around this region. So now if I were to go lower to the 1-hour chart, you can see what's happening. We have a big wave top situation here, and then we have a smaller one here. So I'm just going to use the small one and look for, let's see, okay, so you see that by using the Apexalpha wave calculator here, you can see that we already have our price targets calculated for us. That will return back to the 4-hour chart. So now, since we already estimated that we possibly have up to 50, 60 pips left, that means that the market might want to get to this region and possibly here. Okay, but if you really wanted to take this trade, you might be thinking of this area. Okay, so that means you're only looking at about roughly 20 pips, which is still not bad. Okay, this is wave 1, wave 2, wave 3. So right now we seem to be in the fourth wave, or we are just about to start the fourth wave. Okay, so that means you still have a little bit of waiting to do here. And how are you going to wait for this fourth wave? You have to use the other principle that I used to teach about, which is from the end or the beginning of the third wave to where the market stopped, you look for the region of the 62% or 55%. So I'm just going to mark here because that's where we have resistance. So since we're in the fourth wave now, you can't jump into this trade. You have to wait for the fourth leg or the fourth wave to exhaust itself. Now, most likely it might get up to here. It might or it might not. So now, if you wanted to take this trade, since it's a short trade you are looking for, you are going to have to wait. And this is the instance where I'm going to now plug in the Apexalpha indicators, and you can see what's happening right now. So on the 30-minute chart, you can see we already have a golden cross here. So that means in order for us to continue this trade down, we are going to wait until we get a death cross on the MACD heading down. Okay, so I have to go as low as the 15-minute chart to have a look, and you can see we already have positive divergence here. Now please, if you do not know about negative and positive divergence, you are going to have to study up on it a bit. Essentially, this is positive divergence. That means that you can see that the market is making lower lows and MACD is giving us higher lows. Okay, the second wave is higher than the first wave. So that's just it in a nutshell. And for negative divergence, that means price will be giving you higher highs and the MACD will be giving you lower lows, okay, or lower highs rather, lower highs. So right now, what we are waiting for this trade is something that will look a little bit like this, just like this, meaning that because this is negative, positive divergence, most likely the market might push up to this region of resistance here. So, and it will end up giving us something that looks like this. We are looking for a wave top situation. So if you were to wait on the 15-minute chart patiently, you are going to get a death cross on the MACD, and if you are lucky, you get a death cross on the EMAs. If you are not, you just get a bounce. So you can get in a short trade using this method like this. So I hope that you were able to understand that, right? If you don't, please watch it again. Watch the first instance and then watch this. So I'm going to go back to the monthly chart, and I'm going to do a third example. Let me use a major pair this time. I'm going to use the GBP USD, okay, to make it easier. I have to remove these indicators here, so I'm just going to go with price action. All right, so let's look at the GBP USD. I'm on the monthly time frame now, and remember what I told you. The first thing you want to check for is determine which direction the market is going, and also look at the most current levels of support and resistance, but don't mark it on the monthly chart. Just eyeball it and have an idea. So this is where the most current level of support is pertinent to us here, okay, and also here. So we go to the weekly chart and we have a look. Now at a glance, I can see we are under an Elliott wave here with 1, 2, this whole thing is 3. We are in the 4th wave now, and it seems like 5th wave might begin soon enough. So, but what you are supposed to do is just mark the most current levels of support and resistance that are pertinent to you. In this instance, I'm going to mark this region, okay, because there are more candles in that region for me, and I'm going to mark. You can mark here, or you can just mark here, okay. Let's just mark here for the fact that we are looking for day trades and intraday trades and probably swing trades. So you go to the daily chart. Now you see that I really should have marked here because that's where the support really is, okay. But let's just leave the support, the resistance here, the resistance. So let's just leave it for at this point for now, because the market is still respecting that region. So now you begin to look critically from the daily chart. You look critically to determine how you can get into a trade, okay. So at these levels here, you can see there was a lot of activity and we had a lot of reversal candlesticks to show you that the market was going to reverse. Here we had railroad tracks and that pushed the market down. Here we had railroad tracks, it pushed the market down. Here we had an inside candle, pushed the market up. Here we had spinning top, pushed the market up. So now we are currently in this downtrend here, and we are more or less at this region of support. So even if you wanted to trade now, you will want to wait to see what the market is saying, okay. So most likely we are going to get another bounce. So we go to the 4-hour chart and have a look. So this is what's happening on the 4-hour chart. I can't see any discernible pattern right now. Remember, we are looking for wave bottoms and wave tops, okay. So right now, when you come to the 4-hour chart, you can either wait here or you determine if the market is going up or down and then decide on what to do. So now you can see right now where we are, there is no discernible pattern for us to trade. Go down to our chart and it looks like we might be getting a wave bottom situation soon. I'm just going to put in the indicators again and let's have a look at how it looks like. So this is what is happening right now, okay. when I looked at this chart on Sunday, I initially thought we were going to get a wave bottom here, but then the market resumed the downward move, and that's normal. The market will do what it wants to do. So for the GBP USD, I see no discernible pattern, but if I go to the daily chart again, what I can just say from here is that we might bounce off of this region again, most likely. So what you are going to do is wait until you see a discernible pattern, preferably on the 4-hour chart and the 1-hour chart. And what are you waiting for? You are waiting for, I'm just going to look for the pen here. Let me mark this. So basically we are looking for something like this, and then to trade to the upside. Okay, and of course that means we're going to expect to get in somewhere around here. So technically it's something like this we are looking for. You might get that, you might not, or it might look like this. If I can just get it to work again, it might look like this and then up. Most likely it might give you something like this. All right, most likely it might give you something like this. So how are you going to wait for this? The best way to wait is to determine and wait for a golden cross on the MACD, golden cross on the EMAs. So basically we are looking for something like this to take us in this trade. Okay, so you can either wait here like this, or you can choose to go to another time frame and find what you are looking for. So I hope that you understood what I was saying. Now if I go to the daily chart again, I can just quickly show you guys using the GBP how looking for the candlestick patterns on the daily chart can get you wave tops and wave bottoms. Okay, so let's start with this place. Let's start with here. You can see that after the price came down and got resisted here, we got a spinning top, an inverted one. So let's just mark that region so that you will see what happened. Then I will have to bring out this arrow here so that I can trap the chart like so. All right, now go to the 4-hour chart. 1, 2, 3. Okay, so now this is the 4-hour chart, and this is where I marked. You can see what happened. On the daily chart, it was an inverted hammer, right? But you see on the 4-hour chart, this is what it gives you. It actually gives you, just make it smaller so you can see, it actually gives you an incidence of positive divergence, okay, because this point is lower than here, and then after the positive divergence it gives you a wave bottom situation, which if we had taken this trade from here all the way to this point, it was good for over 300 pips. You understand? So now that is that region there. So let's go to the daily chart again and have a look at the second region here. So assuming you had come to this chart and you saw railroad tracks here on the daily chart, and you go to the 1-hour or the 4-hour chart. So I'm just going to move the arrow to that place again and show you. So going to the 4-hour chart, this is it, and you can see what happened. We got a wave top situation here. So meaning if you had gone into this trade, of course it's not easy to see this when it's happening, but if you had waited patiently, you wait for your death cross, you wait for a death cross on the MACD, you go in from here, okay, you go in from there, from that point where you get your death cross all the way to this zone, it's over 200 pips. So now this is where marking the weekly support and resistance levels come into play, because if you really mark them, just mark here and then mark there, because if you had really marked them, then you would have been able to stay into this trade at least from Monday till Thursday or Friday. Okay, so most of the trades will end up being swing trades for you if you have the patience. Now let's look at this one as well here. So we had here a candlestick pattern that is an inside candle, okay, for those of you who are aware of that. But if you are not, then look at this. This is an inverted hammer at this region of support. So you see this, for instance, and you come here, okay, because remember, when you, let's assume you come to this chart and it's this red candle you are seeing, you are not going to make any decision. You are going to wait, because since you are trading tops and bottoms, if you don't see a top, if you don't see a bottom, you are not taking that trade. So that means when you saw this candle, you were looking for a top, right? But then the next day occurs and then you see this. So that gives you an indication that the market is reversing itself. And of course, because you would have known that this was an area of support based on what was going on here, you would have been paying attention to this level, right? So you come here, you go to the 4-hour chart, and this is what we see. Okay, we had a smaller incidence of a wave bottom here, because if I go lower to the 1-hour chart, you see that we had a wave bottom situation here. Okay, taking this trade to this region here would have given you about 70 pips. All right, but from the 4-hour chart, let's say you were not so certain and you are waiting for a cross on the MACD, cross on the EMAs, and you waited and waited, and you got in here all the way to this zone, to the previous level, or even here to the previous level of support, will have given you about 185 pips. So I want you to see the value of these areas of support and resistance when you take them from the weekly chart. They are very powerful. Support and resistance levels from the weekly chart are very powerful. And having said that, because of what is going on here, if I wanted to take this trade and I was willing to wait patiently, then I will be waiting for a wave bottom situation here. And the best way to wait for it is to get a golden cross on the MACD, a golden cross on the EMAs, and take this trade up. Okay, so even if we got in from, say, around this region and took it to this level up here, sorry, I just have to do that again, from here to this level, that is still over 200 pips. So you see that this is not something to joke about. Okay, so let's do one more final example before we call it a day. I'm going to use okay, let's use the Euro AUD, go to the monthly and analyze. Okay, so another way for you to really understand this is to begin to practice. As you watch this video, I want you to go to your chart and practice. Start from the monthly, eyeball the monthly, and have a look at what's going on. Right now we are in a downward spiral, okay, from this massive spike here. And usually when the market does that, it tries to find this previous level. Now it seems to be halting at this region here, acting as it was resistance here, now it's acting as support, and we have an inverted hammer here. Okay, we have a golden cross on the MACD, but I promised I wasn't going to use indicators at the beginning, so let's go to price action. Okay, now we can see it better. Okay, even at a glance you can see that this entire region here is full of activity. So that means between here and here for the monthly chart is an area of extreme support and resistance, which is where we are. So that is why paying attention to where the market is now currently is very important. We have an inverted hammer there, so we are going to pay attention to that. Even though we had a massive hammer here pushing price down, now we come here, we have an inverted hammer, so we are going to pay attention to that. So you go to the weekly chart, and this is where you begin to draw support and resistance lines. So the most current levels of support and resistance for us are here and here, where the price is currently. Okay, it could also be here too. So let me just shift it down because I don't want too many lines on the chart. Now you begin to analyze your chart from the weekly. You have this prolonged candle here, and just before that you had this beautiful hammer here. So you see that this area is important to traders, this region between the two lines. So now we had this prolonged hammer and we get this. So this is beginning to look like an inside candlestick formation, inside bar pattern. So we go to the daily chart and you can see what's happening. On the daily chart, I see what looks like a wave bottom, but really it's not a wave bottom. This is actually divergence in action, because this level here, I think it's lower by 1 or 2 pips than here, so it can't be a wave bottom. This is a divergence situation. But if you see a positive divergence situation, usually it's creating the way for a wave bottom situation. So that means we are still going to get a wave bottom situation here. Now remember that this is the daily chart. So right now on the daily chart, we even had an inverted hammer here, which is pushing the market up. So we are thinking probably opportunities to buy right now. Going to the 4-hour chart, this is what's happening. Okay, you can see we had another incidence of negative divergence here, and then we had a wave bottom situation here. Okay, so I'm just going to put in the indicator so you can see what I'm saying. Okay, you can see it now, right? You can see we had a golden cross on the MACD, and if I just make it bigger, we actually had a golden cross here and then it crossed down and gave us another one. So now we have a valid wave bottom situation. So if you wanted to go into this trade and take it to the upside, you will wait for another opportunity to go long here. Okay, this particular trade, I actually took this trade here when I saw railroad tracks on the 4-hour, and I profited up to this level. And then I believe I entered again here, but it was late and I got stopped out here. Okay, then I took another from here to this zone, and then I placed my stop here when the market moved up, and it took me out. So in order for me to get into this trade now, I have to wait for another opportunity to go long, and this is how you are going to do it on this particular chart. You come to the now, let me explain about the divergence very well here. You see, this is divergence. Okay, this is positive divergence here. MACD shows it to the price, and you see after the divergence situation we'll have a wave bottom situation. Now we have another incidence here of divergence again. Okay, sometimes it will show on the MACD, sometimes it will show via the histogram, and other times you use price to look at it. So this is an incidence of positive divergence, this is another incidence of positive divergence. Okay, and that is why the price went up and is coming down. This coming down, it's in essence trying to create a wave bottom situation again. So another way of looking at this chart is this is a wave bottom. From here to here is another wave bottom, and then from here to here is another wave bottom. So if we plot the most current one from here to there, you can see our price targets go up to this region. Okay, the first area to consider taking your price targets will be number 1, because we have a region of good resistance there. The second area will be here just after target 3, or rather target 3 too. Then the third one will be target 4, and if we can get through all that, then we are looking at target 5 and 6. So you see that the Apexalpha wave calculator really is very accurate, because it actually plots the price targets for you based on the regions of support and resistance. So your first level of profit target will be here, and if we look at that, that's over 200 pips, 212 pips. We have a golden cross on the MACD. We now have a golden cross here. So all the indicators are telling us to take a buy trade. So for this particular trade, you go to the 1-hour chart and wait. Now, this is the 62% region. So, and I've already taught you a lot about that already. I believe that most of you are aware of what I talk about. When the market is in the trend and begins to retrace, you take from the number 3 level to the most recent level of resistance in a buying situation rather, and you wait for the 62% level. So this region here between 62 and 55 will be a good area to wait to take this trade to the upside. And you can see that that region is also a region of support. Here it was support, here is resistance. Okay, he acted as support here again, and now it looks like he's going to act as support here again. So this is a good area for you to wait for the market to reverse here, and then you can take this trade to the upside. All right, so you see now how easy it is to find good trades if you know the basics of your trading: support and resistance, candlestick patterns, and of course knowing the Apexalpha system doesn't hurt at all. Okay, so I hope that this video was instructional for you. Please watch this video over and over and practice. Practice makes perfect. The more you practice, the better you get. Okay, I did not get this way overnight. I kept practicing for hours on end, every day, Monday to Friday, and even weekends. I practice all the time, and that is why I'm able to see these patterns. That is why I'm able to understand this, and I'm trying to impart the same discipline into you. So please, at least an hour every day, try and practice this system, practice these techniques, and then you are going to get proficient. Okay, so happy trading to everyone, and thank you very much.